Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a new day, and while yesterday we saw a big rally, the GIFT Nifty is pointing out to a quiet start for our own markets. But since Reliance was the big power maker yesterday on the back of its better than expected March quarter performance, we'll watch out if the Q earnings season can support the rally forward too. In the pre-open rates, however, we can see that the Sensex is up about 100 points and Nifty is also above that 24,350 mark. If you look at the global screen, mixed signals coming in. US markets closed on a mixed note overnight. The Magnificent 7 earnings is due tomorrow and day after, and that will set the tone of the trade also. Asian markets also opened with minor set of gains as investors try to gauge the impact of tariffs on corporate earnings. And since we are mentioning about tariffs, US Treasury Secretary also indicated that India could be one of the first countries to hash the trade deal with. So that's a positive for India. He also indicated that Japan and other Asian countries are also in trade negotiation talks. But apart from markets, on the geopolitical front, tensions are high on the line of control. Yesterday, we saw Defence Minister briefing Prime Minister about the security arrangements, and reports also emerged where Pakistan Defence Minister said that a military incursion by India is quite imminent. So we'll watch out for those developments too, and of course defence stocks, which is gaining flavour on back of these developments too. So we'll watch out for more of these stocks too. More stocks in focus: Ultratech, Trent and the likes. They will be reacting to its fourth quarter numbers. We'll take up your stock related queries too, so keep posting them on our live feed. Before we move further into the show, let's quickly take a look at the top headlines this hour. Wall Street mostly ends higher ahead of a raft of economic data and corporate earnings. Dow Jones and Nasdaq Composite edge higher amid tariff talks, while S&P 500 ends fractionally lower. Asian markets are positive even as the impact of Trump's tariff looms. GIFT Nifty, however, is indicating a flat start for our own markets. Oil prices decline on economic worries from US-China trade war that could pressure demand. Gold prices meanwhile reverse course and rally back to $3,350 per mark. India could be the first country to ink a trade deal, says US Treasury Secretary Scott Bessent. Puts the onus on China, saying it is up to Beijing to de-escalate and avoid the 145% tariffs. And in key earnings today, Bajaj Twins will report their fourth quarter results. Also watch out numbers from BPCL, Ambuja Cements and Trent. Alright, yesterday Nifty did resume its rally after its two-day pause. We saw that Nifty reclaimed that 24,300 mark, and Sensex also jumped over 1,000 points. Broader markets, that also joined the rally, and Nifty Midcap among the broader end of the markets led the charge from that front. In key earnings today we'll watch out for Bajaj Finance, Bajaj Finserv, both the Bajaj Twins, Trent, Ambuja Cements and BPCL in Q4 results today. But two main cues that will set the tone of the trade today. That is your first is your fund flows data, where we can see that the FIIs continue to be net buyers for the 8th consecutive session. They have bought stocks which is worth about 2474 crore rupees in the cash markets, and DIIs have also bought stocks which is worth around 2818 crore rupees in the cash markets in yesterday's trading session. The next is your option cues data, where the Nifty put call ratio that has jumped to about 1.22 from 0.87 levels in the previous session. So that's quite a bit of an optimism which is coming in from the option cues front. On the F&O ban list, one new stock, which is your RBL Bank, after it reacted positively to its Q4 results yesterday, that has been added in the F&O ban list. It is the first in the May series that has been added to the F&O ban. However, none of the stocks which have been retained and none of them have been removed. Now, just a couple of minutes before we go to the open, let's quickly get on board with the technical expert of the show. Joining me is Jay Thakkar of ICICI Securities. Jay, good morning. We saw a large rally today, but Nifty is stuck in a tight range between 24,250 to 24,300. How much further upside can we eye for 24,500 soon?
Very good morning to you, Lovisha. Well, see, the initial rally which we saw in the market coming in was due to it was banking-led rally. I mean, we saw good, push, or I would say good momentum in the private sector banks, and which definitely has Nifty to bounce back from those 21,750 levels approximately. And then lately we have been seeing that it has been now slowly and gradually, there are other stocks which are also contributing quite well. I mean, we have seen some bounce back coming in the IT names, at least from the lows. We have seen the Reliance bouncing back quite significantly. I mean, from 1150 lows now to 1375 levels. So it's 225 points up from its lows, which is more than, kind of approximately 20% gains from the bottom. Okay, all right. I would say that, apart from these two heavyweights, I mean, banking and the land, the cement stocks are also doing quite well. I mean, we had a result of Ultratech, and I'm bullish on the overall cement pack, maybe Ramco Cement or maybe Ultratech Cement. Today, as you said, we have a result of Ambuja Cement as well, and let's see what happens exactly, because Ambuja and ACC have not been performing for their own reasons. Otherwise, I would say that the cement pack overall is definitely positive. I'm positive on that sector per se. Then we have seen a good bounce back coming in the Nifty FMCG as well. Overall, right from the bottom from 50,000 levels, they're quite up more than 10%. So that has done good, and that has contributed as well. Along with BFSI, we have seen a good bounce back coming in few of the auto names like Ashok Leyland, M&M, a bit of Maruti, TVS Motor. It's just that the two stocks in the two-wheeler space, Lovisha, that is Bajaj Auto and Hero MotoCorp, wherein we have seen FI selling up to the tune of 2 to 2.5% overall, right from September until March. I mean, in March until March quarter also the data is out. So they're sold between 2 to 3% in these two-wheeler names. Apart from there, I would say that the auto sector, which is around 7% weight in Nifty, that has also done well. And I mean, if you look at the construction stocks like L&T Infra, I mean, all the construction material stocks, I mean, that is cement, they have done good. They're around 3%, 3.5% kind of a weightage. Pharma has also managed to bounce back. Few of the stocks like Sun Pharma, has done good. Previous Lab has done good, looking good. Lupin is looking good. Laurus is looking good. So pharma has managed to bounce back apart from two stocks like Aurobindo Pharma, and that pharma sector overall contributes 7% to the Nifty as well. So what has not is metal overall. I mean, apart from JSW Steel, which has been trending higher, and which is dwelling in and subsequent, it has immune to this overall fall and outperforming significantly the overall Nifty metal pack. That's the only sector which has got around 7.5% kind of a weightage. Nifty is trending still to actually contribute to this overall bounce. Otherwise, I mean, it has been a broad-based rally, and I think Nifty, yes, as you asked me whether 24,500 are likely targets going forward. I think positional perspective, Lovisha, 24,500, 24,800. These are the levels we are looking out for because of mainly these reasons. Now, can it come straight from here or can it come on depths? I would say that yes, the overall support on the lower side is now at 23,800 in the short term. Till those levels are held, we can see the bounce from here on.
Okay. Jay, 800 also we can watch out for. Jay, yesterday Bank Nifty also made a higher high and low yesterday. So how do you expect Bank Nifty to do today itself? Because that is also one of the key to lead any outperformance in the Nifty going forward.
The Bank Nifty has outperformed already, Lovisha, and I would say further it will see, because the reason is that few of the stocks, I mean, two main stocks, I would say. One is which I would not be able to comment on because of the compliance reasons from private sector banks. But apart from that, Kotak Bank has come out from its 3 to 4 years of range. HDFC Bank has come out from its 3 to 4 years of range, and it's just HDFC Bank is 5 to 7% up from this range breakout, and Kotak Bank is definitely 10% up from its range breakout. But can it go and break that range now? I am not expecting that. In fact, it can dip by 2-3%, but it cannot break that range now. And after having broken out from 3 to 4 years of range, at least we can expect these stocks to perform for 5 to 6 months. Right? So it's just been a month. So overall, these two stocks are likely to do good. We have seen a good short covering coming in the Axis Bank. Okay, wherein it had at least to the tune of 7 to 8%. Okay, more than that, not that. IndusInd Bank, they are sold by 10%, and they have bought back 4.5% again by March. Okay, they had shorts mainly in Axis and IndusInd Bank, when we have seen good short covering coming in now. Okay, and otherwise other sectors are doing good only, and private PSU banks have now bounced back. So I think Bank Nifty overall is likely to reach towards 58,000. In the near term, I believe that yes, till 54,000 levels are held, we can see 56,000. That is the short-term target. Positionally, I think it's heading towards 58,000 till 52,000 levels are held. For me, a reversal in Bank Nifty is at 52. If those levels aren't broken, the trend is up.
Okay, okay. What about Jay, about the mid cap and small cap space? Because despite the decent correction, some of the counters are still trading at a premium. How do you
Yeah.
view that space, and would you advise investors on that?
I mean, that mid and small cap might take some time. I mean, there would be a lot of, not all of them would be participating in this up move. I mean, sometimes you see defense stocks going up, sometimes you see rail stocks going up, sometimes you see the public sector stocks going up, which were beaten down quite a lot, and sometimes you will see probably, rail, it was PSUs and defense, and maybe, and then few other sectoral stocks. Otherwise, these three were the worst trade, and maybe something from the oil and gas and auto ancillaries. And these are the five sectors which were badly hit in the previous fall, which we saw in mid and small cap, which corrected by more than 30% index-wise. Stocks-wise also we saw 30-40%. So not all of them are going to make lifetime high in this rally, which we are seeing, and it will be a lot of pick and choose kind of a thing. So I mean, we can discuss stock specific. For me to say that which stocks are likely to perform and which not. So I would say for the viewers is that relative strength, wherever you see higher, those stocks are likely to perform. Don't go for a bounce back only, because that bounce back may come and may not last much. Those stocks which have been relatively outperforming their benchmark indices, in this bounce back they will perform better.
Okay, all right. But first, rates coming on your screen. That is we have opened in the green. Nifty above that 24,300 mark or so. Sensex is also up about nearly 300 points. So yes, despite the global volatility that we saw, quite a mixed signal that we saw, we still have, despite that, we have opened positively in the positive territory. If you look at some of the sectoral indices at this point of time, Nifty Realty Index, Nifty Pharma Index and Nifty Bank Index, all of them are holding well at this point of time. Nifty Auto Index leading the charge with about more than 0.5% gains coming in there. Also, mid cap and small cap indices also exhibiting good trends with about nearly 1% gains. They are outperforming the headline indices at this point of time. If you look at some of the top gainers on the Nifty 50, those include some of the auto players, for instance, your Tata Motors, Hero Motocorp with a gain of about nearly 1% or so. Tech Mahindra, Axis Bank also seeing a gain of about more than 0.5% or so. On the other hand, if you look at the top losers, Bajaj Twins ahead of its Q4 results is not doing well, seeing a cut of about very slim cuts, but minor cuts of about 0.1% or so. Bajaj Finance, any take, Jay, on the counter, because we are expecting a strong Q4 on the back of a good loan growth.
See, overall, I would say I am bullish on the banking financial services, even for that matter, insurance company. Overall, BFS has been doing good, 38 to 40% kind of a weightage on the Nifty. Now, I mean, as the result season is out, we have been seeing that prior to that, the financial services index did well, Bank Nifty did well. Post results, we are seeing correction coming in Shriram Finance, Chola Finance, L&T Finance, So we are seeing corrections out there. Probably, the results are not meeting the expectations, but then the outlook forward is positive. And as far as Bajaj Finance is concerned, we are not seeing short build-up here. Whatever shorts we are seeing are build-up here in Bajaj as well as its parent, other company Bajaj Finance had seen a short covering rally significantly, because of which Bajaj Finance broke out of its 3-4 years kind of a range, which I mentioned about Kotak and HDFC. Similarly, Bajaj Finance also broke out of this range, above the levels of 80-200, which had retested the same and moved or inch higher again. So I think positionally 80 to 8300 levels when Bajaj Finance are held, and I mean, if at all there is retest of it, you can buy it. Otherwise, it's a buy on this stock definitely. Until you are not seeing significant shorts getting built up, or maybe something negative, or the guidance is negative. I think the overall sector is bullish. I mean, the kind of provisions made by the RBI as well. I mean, provided sustained or continuous liquidity to maintain the liquidity into the system, the rates coming down. I mean, they are one of the beneficiaries of the same. I mean, rates coming down significantly. I mean, 25 bps on each of past RBI monetary policies, and the liquidity management as well in the system. I think, and the kind of, in the budget when the, Honorable Finance Minister announced the tax benefit until 12 lakhs, I mean, that's going to come out now into the play from this financial year. Once people are going to get salaries, I mean, it could be getting adjusted and then, expecting the consumption to go up. Now, that effect is going to be seen now from April on ground, right? So I think things are positive. I don't see a problem until 80 to 8300 levels are not broken.
Okay, all right. Let's take one stock in focus. That was your Ultratech Cement. It's reacting positively to its Q4 results, where we saw that the net profit has risen about 10% year on year, and revenue has also grown about 13% year on year. On the operational front, EBITDA has grown about 12.6% year on year, while the margins have contracted by about 20 basis points year on year in Q4. However, Jefferies has maintained a buy on the counter and has hiked the target price to about 14,000 rupees per share. And they believe that the company has reported a healthy EBITDA growth after 3 quarters of decline. So this is a key positive that came in for the company also. Jay, if you look at the stock, it is up 19% from the February lows, and now it's reacting positively to its Q4 results also. How do you expect investors to approach this counter?
Lovisha is one of the outperformers, I would say. Quite immune to the overall fall which we saw in Nifty. Uh, and as you said that, the results are out. I mean, the same view I have, that overall outlook for the cement sector overall is positive for me. I think the cement prices seems to be bottomed out. Okay, and that's going to benefit in that bottom line as well, right? And the revenues are going to, are expected to grow as well. Um, Apart from that, if I look at the derivatives data, Lovisha, we have seen long build up here, no shorts. So, which is positive in this kind of a market. I mean, definitely in this rally, you have two things. Our traders have to look from two angles. One is the stocks where you have put shorts, and if at all there is a rally or a positive commentary or a positive news in that particular stock or a sector, that can lead to a short covering and a good up. That is point one. And secondly, those who are seeing a good long build up, okay, wherein there is a less downside risk relatively. Okay, those are the stocks which we need to help you to lead to the market. Those stocks which are into the long unwinding, I mean, we would be avoiding those, and those which have getting shorts build up, we would be avoiding those right in the rally. So Ultratech actually falls in that long build up, provided a good breakout from a expanding triangular pattern. I think that till 11,800 levels are held in the immediate basis, and 11,400, which is the VWAP. The outlook is that it can reach towards 14,000 levels as well.
Okay, all right. 14,000 levels is what you're watching out for Ultratech. But let's move on to, let's take some viewer queries that is popping up on our screen. The first query is coming in from Naveen. Is asking the views on Bharat Electronics. How does the counter look like, Jay? Because from the past 10, 11 days, the stock is up about 13%. Would you say that this is the right time to buy?
As a disclaimer, in your Money Control's article today, I have given a buy recommendation to Bharat BL. Point one. Second is I'm bullish on the defense space in the short term because of the tensions which we all know. It's an unfortunate thing. But then the defense stocks had gone to oversold, and we are seeing a good short coming there. But then BEL is one of those stocks, Lovisha, which has provided a breakout from a sideways consolidation, and now above the levels of 310. I mean, it's likely to inch toward the lifetime high. So I till 290 levels are not broken, one can be bullish on BL. Below 290, I mean, one should be closing all the long positions. There is no point there after being long on BL. But if 290 is held, is going for lifetime high.
Okay, all right. Let's take another viewer query, that is Shyam is asking the views on Interglobe Aviation. From the 6-month charts perspective, the trend is quite positive, Jay. What is the next that we can eye out for Indigo as an individual counter?
Well, I mean, Indigo definitely has seen a significant rally. I mean, it's, if I'm not wrong, correct me if I'm wrong, I think it's one of the highest market cap kind of a company in the aviation sector in the entire world now. But that's quite good thing, and it's positive thing for India as well, for the company as well. And I think till the recent development which happened, Lucia, I think the investor or the traders might be concerned about the same, that there have been a lot of cancellation, right? With the flights from Jammu Kashmir, the tourist season can be spoiled there. I understand that. But from the short-term point of view, it can impact Lovisha, no doubts about it. There are some long unwinding because of which as well in the derivatives data, but positionally, I don't see a problem. Okay, I'm sure
Okay.
things will be fine. And with a one state, the overall company's revenue is not going to be impacted so that it could be downgraded. So short-term impact is there. I would say those who are holding longs in the near term can book out profits. Can book out profits or maybe hedge your positions by buying put options of around say 40, 5400 that is ATM, maybe 5300 that is a bit OTM. But those who are positionally long should not be worried.
Okay, all right. Let's take one stock in focus, that is your KFin Technologies, because it's reacting very well to its Q4 results. 3% uptick after the profit has grown about 14.3% year on year, and revenue has also risen to about 24% year on year. On the operational front also, we are seeing that EBITDA has risen about 17% year on year. However, margins have seen a bit of a contraction to about 43.2%. Jay, if you look at the past 1 month, the stock has seen a good run up of about 20%. How much of an upside do you see going forward?
Well, see, Lovisha, I would say that, as far as K Fintech is concerned, this is one of the stock which is in, not in F&O basket. I mainly track being heading the derivatives and quant. I track mainly F&O, but, I also check non-F&O, but looking at derivatives, so that's a disclaimer first, right? Second is, the overall two sectors I would say which have done significantly well in this bounce back apart from the banking. You know, from the broader markets, Lovisha is the capital market sector for Nifty capital markets, and second is the defense. Okay, and third is this is among that K Fintech, CAM, CDSL, PSC, all of them. So it has done good. Overall outlook for the market for the long term, medium to long term is positive. So these stocks are positionally likely to do good in the longer run. From the short run perspective, I would say that high tops and high bottom are seeing. So till 1060 levels are held, or probably 1100 levels are held. 1060 to 1100, you can be technically bullish on this stock for the trading angle for a target of say 1400, 1450 for the short term.
Okay.
Long term is definitely positive.
Okay, all right. Let's move on to another viewer query, that is your Debuke is asking the views on Sterling and Wilson Solar for a fresh investment. How does the counter look like, Jay? Because we can see from December to March it has seen a significant correction, and right now from its March lows it is recovering to about 20 odd % or so. Do you believe that this is a good time to buy?
Well, it has reversed from its long-term support levels and it can bounce back or retest, but this is not one of the stocks to be in from the investment point of view, Vishal. I am very clear on that. I mean, within this space, we have many better stocks, quality names. Okay, so one should be exiting this from the medium to longer term perspective. If you are bullish on medium to long term, if you are from the trading angle, I mean, you keep trailing your stop losses and book it out around 350, 330, whatever you get a chance. But from the positional perspective, investment perspective, this is not the stock to be in. At least from the technical perspective, it's not in FNO, so I would not be able to comment derivative point of view. Technically, it's not a stock to be in.
Okay, all right, and avoid for the stock then. Let's move on to another viewer query. Anune is asking that he's holding BLS International at an 8% loss. So should he add more or hold or exit? From 500 odd levels, it is trading around 360 odd levels, 374. What is your view on the counter, Jay?
Well, the viewer has entered, I would say, the stock, and the overall momentum for this stock has lost on a monthly basis, and it has gone up quite heavily from 7 rupees to 500 rupees. Okay, 7 rupees to 500 in 1, 2, 3, 4, 5 years. I mean, it's 6 times, 600 times. 60 times. I think there's not. I mean, if being an investor, you're expecting this stock to do that well, I would not expect. So, and we are seeing some monthly closures or sell crossover on the stock, so it's better to exit from this stock. It's like 70 times that. From 7 rupees to 500 rupees.
Okay, all right. Exit for this stock too. Let's move on to another stock in focus, that is your Oberoi Realty, because it's reacting negatively to its Q4 results. We have seen that the profit has slipped about 45% year on year, and revenue is also down about 12.5% in Q4. On the operational front also, the company has reported a weak set of figures, EBITDA falling about 22% year on year, and margins have also narrowed to about 53.7%. Jay, if we look at the stock also from December top, it is down about 28%. Do you expect investors to remain cautious on the counter too, going ahead?
Well, Lovish, I would say about this sector as well. First of all, see, this sector has seen a good boom, right, from COVID, like the stock market. I mean, both of them just made their lows and went up, right? Unidirectional move. Correction has also come together. First always comes in capital markets, which gets translated to the real economy later on. So it's seeing that lag effect of the markets coming down. I mean, few of those, I would say people have also mentioned the same. Maybe the top-notch management of few of the real estate companies have also mentioned that, which is not wrong. I mean, the fact that the money was actually, there was a good liquidity in the system, there was a good flow in the capital markets, which got translated into real estate as well. I mean, from the investment point of view, or maybe, in the real buying perspective. Now, since the economy slowed down from last, or maybe I would say from Q3 of last financial year, so Q3 and Q4 were not good, so that gets translated here, and because of the Nifty reality as well, corrected. But then, if at all we have a positive outlook on our economy, on our capital markets going forward from the long-term point of view, I think Nifty reality has more legs to go up. From the short-term point of view, we have seen short build up there, and the stock has corrected. So I think it has got a good support around 1550 levels, Lovisha. Till those levels are held, it may again bounce back to 750. So for me, it's not a sell. Post results, for me, it's a buy, and buy on dips for 1750. That's a bounce back. That's a short-term view. From the medium to long-term perspective, I think, this is one of the good stocks to be into, as the index is likely to progress going forward. This will definitely perform well. It can be either market performer or outperform. I'm sure it will not be an underperformer.
Okay, all right. So buy on dips for the counter for Oberoi Realty. Let's move on to a viewer query right now. Anune Iriki is asking the views on Tube Investments. He's bought it at 25.49. So he's asking whether it is a good time to hold or book profits at this particular counter. So 27.29, he's seeing a bit of a profit at this point of time, Jay. But if you look at the 6 months charts, the trend is quite negative. What do you expect? What should you do at this point of time?
I'm in agreement with you that overall 6 months trend is negative, but in the short term, we are seeing good short covering in this stock. And from that perspective, and I think the entry level is very good. We can see the levels of 3,000 to 3,100 as well. So place a stop loss of 25.70. I'm giving you the spot levels 2570 till those levels are held. The possibility of 3,000 to 3,100 is higher. So into the stock, risk reward is favorable.
Okay, all right. Let's move on to another viewer query. That is your Maheshwar is asking the views on VST Industries. He's bought it at 330. He's asking whether it is a worth holding counter for more than a year and for an upside of about 20%. VST Industries, how does the stock look like on the counter, Jay, for you?
It's a non-FNO stock. Again, as a disclaimer, I have to comment technically, but then technically it's not looking good. I mean, we have seen a distribution happening at the higher levels. So this came down, volumes went up, indicates sell, and the monthly indicators have also been negative. So, see, it can go sideways or it can fall. It's not looking a stock which can, trend higher from here on. So, better to move into some good, relatively trending sectors or stocks.
Okay, all right. Let's take one stock in focus because it is expected to report its results today. It's reacting well ahead of its Q4 numbers. That is your Trent, where we are estimating that the revenue is expected to rise about 34% year on year in fourth quarter, while profit may fall sharply by about 47% due to the high base effect in Q4. Jay, if you look at Trent, if you look at the 6 months charts, it is down about 28%. There's a lot of, there was a lot of chatter on D Street about valuations being expensive. It has seen a decent bit of correction. However, Q4 estimates are that the company may see a good sharp fall in the profit. How do you approach this counter?
Of course, valuations were expensive, and that is the reason we saw the stock saw a good selling from the higher levels. I mean, from 80,200, it came down to 4400. I mean, it corrected quite heavily from those levels, and we saw FI selling from between 6.5% to 7% in last 2 quarters. So 6.5-7% stake has been reduced by the FI in this particular stock in past 2 quarters. There's a good amount of selling, I would say, Lovisha. The short term it looks oversold. I think quite a lot has been priced in. I'm not saying I'm bullish on the stock from the medium to long term perspective. As of now, there are no such indications from a derivatives point of view. But yes, from the short term point of view, if at all there is a dip, I think it can be looked into from the short covering point of view. It can bounce back until 57.50. So that is what I'm expecting. A short covering is expected because the trend of the market is higher. So this, along with the market flow, there could be a short covering out here which can help the stock to move to 57.50. So if at all there is a dip, utilize that for a short covering.
Okay, all right. Let's move on to a viewer query. Satya is asking the medium-term chart for Sterling Tools. He's asking the levels to add for a long-term horizon. Sterling Tools from 700 odd levels to 323 levels. Jay, do you expect this is a good time to add?
It is quite oversold. We have seen a positive divergence in the momentum. I would say it's forming kind of an inverse head and shoulders pattern, and preempting that is not complete. So chance of a bounce back or retracement of the overall fall, because the fall has been significant, as you said, from 740 to until 270, 780 levels. So a bounce back or a retracement on the upside till 375, 400 can't be ruled out. So it's not a time to sell now. Probably you can wait for a bounce at least. You can sell it there if the view is overall trend is negative. For the short-term traders, I would say whether they should be getting into this. I mean, just from the trading perspective, for now and dips to 300, so you can buy in this range of 323 to 300, placing a stop loss below 280. So you can expect thereafter 375 400.
Okay, all right. Let's move on to another viewer query. Well, Satya is asking the view on Allied Digital Services also. How does the counter look like? Because it has been in a quite tight range, 250 to 190 odd levels, Jay.
Allied Digital is one stock which I'm not liking. I'm sorry, Ravisha, I won't be able to comment on that.
Okay, all right. Let's take another stock in focus, that is your IndusInd Bank, and let's see how the stock is reacting, because we are seeing a senior level executive after the derivatives discrepancy came into fore. Today the stock is up 1.2%, but what is your overall view on the counter, Jay? Is it an avoid?
Yes, so I already said, Lovisha, that IndusInd Bank and Axis Bank, these are the two stocks wherein we saw short covering. These are the two stocks wherein we saw FIs reducing their stake in the last two quarters, and Q3, Q4, and they've come back as well. I mean, as far as IndusInd Bank is concerned, they bought back around 4.5% after selling 10%, and we are seeing short covering. The short covering happened, and it has partially filled the gap. See, the bounce back has happened significantly. I mean, if you ask me from the trading perspective whether the risk load is suitable out here or not, right now in the private sector banks, no. After bouncing back from 600, 640 levels now to 840 levels, 200 points, it would be rather buy on decline than buy it now. And the gap filling partially is also happened. So wait and watch. I mean, it's nothing to hurry in this stock. I mean, one stock wherein I'm comfortable quite a lot would be two stocks would be HDFC Bank and Kotak Bank even at these levels. Well, there's a dip, I'm not worried because the downside is limited. Here, I don't know about it.
Okay, all right. Just one last question before we let you go, Jay. What are your top picks for this hour? Since you mentioned a range of stocks also, what are your favorable bets?
Well, I think that, Lovisha, from these levels, I think from the pharma name, I would be, as I said, bullish on Sun Pharma, which has recently outperformed. And today there is a dip of around 1.5%. So one can look at this stock, placing a stop loss around 770 and go long on Sun Pharma positionally. BEL, as I mentioned, is looking positive from the defense name. 312 right now, last we discussed it was 39310. I think it can likely to make a new lifetime high. So this is one stock one can keep on radar from the defense space. One we have done from the pharma name. I think Ultratech definitely is looking positive for the targets of 14,000 positionally and 13,000 for the short term. So that can be looked from the cement space. I mean, that is also looking positive to me. The final stock which I would like to again add would be from the auto name, and that would be M&M. I think it's trending higher at around 29.50. I mean, this stock has no major resistance now until 3,100. So this can be looked as well. I mean, one can buy at a stagger approach at 29.50 and maybe on dips around 2900 to 85.75 positionally. One can buy with a staggered approach, targeting 3,100 to 3,150. I mean, this has been one stock which is outperforming the auto sector and it's likely to do as well. I mean, these are four stocks from four different sectors.
Okay, all right. We'll keep them in watch with that. But with that, we have to let you go, Jay. But thank you so much for your time and answering our viewer queries.
Thank you. Always a pleasure to be on your show. Thank you. Looking forward.
Thank you. All right, let's take a quick check of the markets at this point of time. Sensex is up about 196 points, so we are off from the day's highs, but still we are in the positive lane. Our Nifty is also above that 24,350 levels. We are below the 24,400 odd levels that we did hit in today's highs level. If you look at some of the sectoral indices, barring the Nifty Pharma, all of the sectoral indices have been trading in the positive territory. Even the Nifty IT index, which was bogged down in yesterday's trading session, is seeing a slim gains of about 0.1% or so. India Wix, that has jumped with about 0.6%, which is your half a percent gains coming in for India Wix too. On the other hand, if you look at the mid-cap and small-cap indices, both of them are trading well in the positive territory. Mid-caps outperforming the large caps with about 0.5% gains or so. But with that, let's quickly move on to the next guest of the show. We have Feroze Azeez of Anand Rathi Wealth joining us. Feroze, good morning. We're seeing a good buying interest in the markets, given the 90-day pause in tariffs also. But do you believe that this could also be short-lived, because the fear could maybe come back as we approach the end of 90-day period?
Good morning, Lavisha. I personally think that this may not be short-lived. Now, when I say that, I'm not implying that the markets can't show you 23,000 or back to 25,000. So that kind of range, I think, has to be an acceptable range, especially from an investor standpoint who even has 6 months to a year on the direct equity side. So point one, do I think this is a very short-lived bounce back? No, because this is a bounce back which is not derivative led. Why do I say so? The short positions were 80%, 79% about 15 days back in index futures for FIIs. Today it has got unwound. The short positions have got unwound, and the short position are down to 59%, which implies that only 21% is 20%, close to 20% is short covering. The rest of it is absolute cash market buying. It could have also been that in the same 10% rally from the lower levels just in the April first week, if the unwinding of short positions was significantly more than this, that implies 80 down to 40 or 30, then I would say this was a derivative-led rally. Derivative-led rallies are short-lived because those are pressures put on a certain class of investors who have expressed a bearish position and they caught on the wrong foot. So that's point one. Point two, the earnings, which will get some finality in the next 10, 15, 20 days. 7 companies of Nifty, 32% of Nifty has declared results. There's been a 5% growth. But I think we should be able to end at 1,030 as the earnings for this financial year, which has just gone by. My estimate was 1,049. So earning support and a cash market led rally makes me believe that you seeing those 21,885 levels, which is what was the last year's low on 4th of June, doesn't seem to get broken. And that's what I think an investor should worry about. If he's worried about 4-5%, then FD is the best place for him or her to be.
Okay, Feroze, the street is banking on about 11 to 12% net profit growth for Nifty in FY26. So, have you do you have an upward projection of what the street is banking on, or what is your estimate for the corporate earnings growth we have seen so far?
See, when we speak of growth numbers or any earnings numbers, we go one step first. We look at 1,154 as our earning estimate, which is a summation of the weighted average of each of these 50 companies. So we go deep down, look at the best analyst on the street, try and read reports and come to 1,054, which implies that if we close this year at 1,030, then the growth would be larger. If this year's estimates are met and 1,049 is met, then the growth is almost about 8 to 9%. If the estimates are not met and if this base is 1,030, then I will look at 11-12% earnings growth for Nifty. And I personally believe that we don't believe in upgrading at this stage. We look at results quarter on quarter and the scoreboard keeps ticking, and then that's when I think we will revise it. So we've gone into the year with 1,154. That's the number to remember from our side.
Okay, all right. Feroze, if we look at 6 months data, banks have been one of the outliers in the market. Would you say that this is the time to book some profits, given we have seen a good upside in selective counters?
If an investor has a perspective of long-term equity investment, banking I don't think is a sell at all because it constitutes to 27.4% of Nifty. That's the heaviest weight. Financial services, the heaviest weight in Nifty. So I personally think banking is still undervalued. Not undervalued. It has discounted the biggest challenge which the banking sector will face in the years or a decade to come, which is the net interest margin compression. So I personally think that's already provisioned for. That's why you see CPEs on 2 sigma lower than its mean and medians. Even P price to book is at 1.5 sigma lower than mean and median. So coming back to the point, I would say that that's the base of the cake. You can't get rid of it, at least at these valuations, unless the valuations were 1 sigma higher than the mean. I wouldn't remove the largest sector from my portfolio if I was playing direct equity, even from a year standpoint.
Okay. Feroze, what is the next sector that you're overly bullish on at this point of time? Because you did mention that this is not the time to actually book profits on banks for a longer term horizon. So what else are you watching out for?
I'm watching out from a 2-year perspective, oil and gas. If you look at the Nifty oil and gas index, I think that's been beaten down reasonably. I think sometimes when earnings don't show up, and then emotions take over. Sometimes you go to the other extreme of valuation. I think there is a lot of merit in owning oil and gas in your portfolio. If you really don't want to be bothered about picking up stocks in the individual sectors which we are speaking about, you always have a great proxy in terms of Nifty oil and gas index. That should outperform Nifty by about 4%, 5% per annum. If that's the objective for a portfolio, then I think that will be a good sector, which is definitely difficult to buy because it's very difficult to buy low and sell high. It's just the opposite which your heart makes you do. It always makes you buy high and sell low. So if you have the courage to do what books tell you, then that's the sector to go for.
Okay, all right. Feroze, what about the IT sector? Because, last week we did see a good upside, but the managements of the majority of the companies have indicated a very cautious FY26. Do you believe that this is already in the price, or is there more downside which could be anticipated from the sectoral perspective?
See, Nifty IT index has about 10 companies. If you look at its growth for the first 9 months, it's 14.5. I think IT has generally had this cautious approach in terms of management because those are one of the largest companies, well managed. So I personally think IT is something which I would own from a 6 months to a 1 year perspective.
Okay, all right. And what is your take on the mid cap and small cap counters? Because do you believe that there is still a bit of froth left in those counters? Because we have seen a decent correction, but do you believe that there are selective counters which are trading in terms of premium, in terms of valuation perspective?
Yes, Lavisha, I personally think we are very, very close to converging, coming to some kind of an equilibrium in all these 3 segments. That equilibrium was disturbed. I think the correction of this calendar year especially has brought in some parity at an index level, point 1. Point 2, since an index of a small cap index, from when I say small cap, I refer to the Nifty small cap 250 index because there's so many indices these exchanges have created. But from a mutual fund standpoint or any domestic institution tracks NSE small cap 250. Any basket of 250 stocks should ideally be bottom up and not top down. Firstly, from a top down, my comment is equilibrium is fast approaching or is already behind us. Point 1. Point 2, it is always going to be bottom up, making generic statements for a 250 stock index, especially in diverse businesses with different pricing models. I would not do the mistake of painting them all in the same brush. Now, third, how do we look at it is if you're really keen to own stocks, then these stress times are great data collectors for you. We generally operate, I at least do a back test of a strategy which has paid off very well, is nothing but in a bad market. Let me lay down these 3 steps of evaluating or creating a portfolio in a circumstance where there's uncertainty. Step one, go back 6 months, 1 year. Look at the worst days, more than 2%, 3% fall days. On those days, list down all the stocks which were positive in NSE Small Cap 250. Once you will get a list of stocks which are positive, arrange them in the descending order of positive, and then see if there were 10 days where the market was worse off. There were, in those 10 days, you get the list of positive stocks. See the commonality. If there is a stock which is common in several of those instances, then keep that aside. And that proves the hypothesis that the owners of this business are not driven by market movement. Whenever uncertainty is there, you have to buy businesses where the ownership is very strong. How do you establish ownership is strong? Is doing a stress test. Stress tests are bad days, positive stocks. If that is a common nature of that specific business, that means if there is 5,000 crores of free float, that is owned by people who are not driven by what Trump is doing, what is going to be the war. It's going to be more business led. So when markets are bad, buy businesses. When the markets are good, buy price. And I just told you, these are times to buy businesses and not buy the momentum and the price.
Okay, all right. Since we discussed about banking names also, Feroze, what is your take on NBFCs? We have seen that, there was a significant slide in Shriram Finance stock price after it reported lower than expected results from the street front. So what is your overall view on the NBFC space, given that we are seeing a stress of microfinance too?
See, I personally think it doesn't. NBFCs are very high beta and they don't justify the differential return. So if you calculate the Jensen's alpha of these two banks vis-a-vis NBFC, you'll be disappointed with the NBFC set arranged in the top 5 NBFCs, the beta they produce or the risk they produce and the extra return they give you vis-a-vis Nifty. Jensen's alphas are very poor. So I am an eternal from a capital allocation standpoint, not a stock or something. If I have to allocate capital, I try to allocate capital on risk-adjusted return basis. And NBFCs have not passed that litmus test of Jensen's alpha, so I stay away from them.
Okay, stay away from them. Feroze, you did mention that you are bullish on oil and gas sector from a three-year perspective. Anything that you are seeing staying on the sidelines apart from the NBFCs?
No, I think I personally think FMCG might not be as deservingly richly valued as it's supposed to be currently. So I would be bearish on FMCG. I think it's basically the lesser supply of free float results in these FMCG stocks having a larger price to earning multiple, and I think that's structurally something which I cannot bring my mind palatable. My mind is not palatable with those kind of valuations for some time. So I would be bearish on FMCG.
Okay, bearish on FMCG right now. But with that, we have to let you go, Feroze. Thank you so much for your time and we hope that we connect with you soon. All right, let's take a quick check of the markets at this point of time. Well, Sensex is down about 63 points. We have flipped into the negative territory. We have we have erased all the gains and we have back to the negative territory. And Nifty is also below that 24,350 odd levels. If you look at some of the sectoral indices, Nifty FMCG, like we were talking about, seeing a bit of a profit booking at this point of time, 0.2% downtick. Apart from that, Nifty Metal Index seeing a cut of about 0.3%. In Nifty Pharma Index, one of the top sectoral underperformers, and the laggards seeing a cut of about 1.5% or so. On the other hand, what is holding well for the markets, that includes the likes of Bank Nifty Index, Auto Index, which is doing well, Nifty Realty Index seeing a gain of about 0.4%. If you look at some of this mid-cap and small-cap indices, that is also off from the day's high levels, however, still in the green and outperforming the headline indices. So yes, we have flipped into the negative territory. Let's see whether there is an improvement in the breadth in the intraday session. But for that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market has developed and what the stocks were in focus. Until then, signing off.